Okay. Sorry, I got to pop up there. Excellent. Thanks everybody for joining. This session is going to be on due diligence, and the 5 of us or 6 of us were actually kind of brainstorming going into the session as to what to cover and what not to cover. We had a formal kind of agenda that we were going through. I think actually, given the number of people that we have on this call, meaning not 30 or 35 plus, we were thinking about doing a little bit of an audible and making it more of a live interactive session, as opposed to listening to some talking heads speak about different topics. Because I think in real time, what occurred to us is we are all facing from different perspectives, obviously on my end, from a service provider perspective and from an investor perspective and CEO perspective, this current environment and tension of increasing deal prices, shortening period, multiples going up, service providers not being available, sellers having leverage from an indemnity and protection perspective has really brought, due diligence into focus. And, it's something that over time has decreased the amount of efforts that people have been putting into it. And I think as a community, we need to kind of sort through that in real time and figure out what role diligence should play in these processes. And is it just a reality of the times that we're going to do less than stellar diligence because the deals, won't support more and we don't have the timelines? And are we going to take that risk? Can it be pushed off to the sellers? Unfortunately, the answer right now is no. Sellers aren't taking that risk because they don't have to in most cases. And what is it that we can do from a best practices perspective to make the situation as good as possible, given what we're facing and the realities of what we're facing? So we thought we might brainstorm on that as a group and make it a live session instead of talking about a whole bunch of different topics, which we can try and filter through. And if we get to a place where everybody's silent, I will certainly go back to the agenda and start peppering questions. With this group, I don't think, I'm not sure that we really need to do introductions because most people will know Larry, Rich, and Kent, and I'm Alex Tummel for everybody here hopefully knows who I am at this stage. Maybe we can each briefly do kind of a diligence disaster story that we've all had. I think everybody on this call has probably had one. I know Kent's been chomping at the bit to tell one. So Kent, I'm going to call on you first, just to set the stage.
Well, it's a different audience. But I would love to hear people's feedback. So we'll change the tenor of this a bit. This is a peer group session. So we'll share some stories, maybe get some learning out of it. One overarching comment that I just wanted to see a response on, and then I was going to throw out something that recently happened and just kind of gauge how bad this is on all of your 1 to 10 scales, because it kind of caught me off guard a little bit. So the overarching comment I'd love to hear from peers is, it seems like an interesting time. I've never seen so many deals, and I've never said no so much. And Rich, as a term of endearment, was calling a little bullshit on me, but I've said more now, and it's not because of personal bandwidth, even though that's strained. I really think it's a seller's market. The multiples are higher. I'm just seeing things that don't meet what I think has been an absolute underwriting criteria for years. And then with service providers being almost impossible to lock down, it feels like it adds to the risk of it all. And so, some of us, we work our relationships, we try to get at the front of a service provider's line, but you can only do that once or twice, and not every searcher gets that. Or you go into your private network and you try to find a service provider to help you out this 1 or 2 times, or you ask the searcher to do more diligence than they've ever done before. So I'm just curious how, this environment and the temptation for weaker diligence on top of it, to me, it adds risk, and it's real risk. But I wonder, would love to hear a couple comments from that, and then I'll throw a zinger or two and just see if you guys are seeing similar stuff.
Oh. I mean, it really has been bad. I mean, there have been
I mean, I think where we're really struggling is the multiples are getting stretched and the diligence is getting lighter, and the check sizes are getting bigger too.
Yeah, exactly.
It is a noxious combination that strikes us as heading towards a train wreck. And we were involved in a deal where we felt like we had committed early because it seemed like we were on a good diligence process, but then the diligence process really didn't materialize the way we had thought. And so we leaned into the searcher to say, we don't think this is the right juncture to close the deal. And he was getting heavy pressure from the sellers. They were going to walk if he didn't close. And I pushed the searcher to actually just table the deal and walk away at the altar, saying this is not the first time it's happened. There's nothing bad in that. You have to remember that closing a bad deal is the worst possible outcome. But we had to stand by our commitment, and he ended up cobbling together enough capital because we're awash in capital right now, and he got the deal closed. And we participated, and it's time will tell, good or bad, but it's been a real source of anxiety for us. And I have no good answers at this stage, because it feels like searchers have strong processes in the beginning, but you're right, when they start reaching out to fill in the service providers, that they're coming up short, and with people that we don't even know.
Yeah.
And I guess, MK, let me ask, in terms of the things that I'm seeing, first of all, the Q of E part has gotten harder and longer and more expensive. And I'm still having searchers, thinking about going outside of, I'll call it the core 4 or 5, or thinking about it because X person's quoted me a longer period or more cost. And I think as a group, what you guys need to think about is whether you want to or should guide the searchers to, look, if it takes another month or it costs an incremental $25K for the Q of E, we're not behind you if you don't take that. And do we think it's realistic that the investors will collectively reach that place, or you're going to be comfortable with provider 8, 9, 10 on the Q of E side? We can get to the legal side separately, but on the Q of E side, because that's the first place right now where in the last week, I've had 3 different searchers say the person who they had identified has now told them they can't even get in the queue till the end of October.
Wow, it's that bad.
Yeah.
So this deal that got done, the Q of E was particularly weak, and worrying. So from our perspective, I mean, I kind of feel like the community, we need a few more providers that are long-term and build a reputation within the search fund community, just because waiting till October, deals are going to slip. And if they're the issue top of mind for every searcher is, I've got a limited runway. I can't let this thing slip.
What was interesting was, and I'll just call, Boulay quoted one of the people that I'm working with, they could do it in 2 weeks, meaning the entire Q of E would be done in 2 weeks. I was like, okay, that is not even possible. Like,
I bet they meant the proof of cash has become the Q of E.
Yeah, that's barely a proof of cash.
That's right.
Yeah.
And so they said, part 1, and then we can be done start to finish in 3 weeks, which tells me that's not a legitimate Q of E.
Yeah, and Boulay would be quoting that?
Yes, that was last week. So even they are now because what's happening is they're all so overwhelmed, they're trying to figure out, how do we satisfy, this demand? And so the product that you're going to be getting is a lot less. And I think you guys are going to have to look at it critically on that note, right? Of what's enough and what isn't, and to really critically look at it.
Do you think, I actually agree on the extending the providers list, and I think that's something that we've probably seen over the recent maybe couple of years. Do you think, like MK, do you think the SFA could send a survey or something to recent CEOs or even investors on providers they have worked with that maybe aren't the top few that we could just as a community get comfortable with and start to work with? I think especially QV, and then on the tech DD front. not to call anyone out, but I mean, we know Spellbound, and that's kind of it. That's like the main name in the game, I feel like, on the tech DD front. So I mean, I totally agree. I think it would be helpful to get comfortable with a longer list.
Cecilia, on that front, I think there's really like 2 tech diligence providers that we worked with, Spellbound primarily on the search side, and then another firm called Crosslake, which does a ton of like larger private equity stuff. For what it's worth, my own opinion is that Spellbound might be a little better. I know some people probably in this audience as well have some issues with, or have had some issues in the past, maybe question some of Spellbound's findings, but I've had similar experiences with Crosslake, and they work with, Vista and Thoma Bravo and guys like that too. So unfortunately, that list, in my knowledge, is only 2 firms long.
Yeah, and Kurt, I think the reality is I'm not sure Crosslake's taken anybody's call on deals the size,
Yeah.
right? Because
They
as
had to
you
work
said,
on some larger deals, like they did some work on One Shield, and but
Yep.
you're right, Alex. Generally, they're getting enough calls from the $1 billion, $10 billion private equity funds that they're not returning our phone.
right?
I think that's consistent. We had Barb Blanton, the CEO, in here last week. They're based in Charlotte. We know them well. We're working on trying to get a product put together from like a scope standpoint that is more customized and more similar to the Spellbound report we're used to try and get to the point of what you're talking about. This is just not enough of a work stream for them as is. But if we could codify it a little bit, they might be able to help us out.
Who's behind me when I go lead the LBO of one of these companies? They got all the work they can handle.
They just did it. They just got bought out.
Oh, really?
Yeah, by Fast Furious.
Interesting.
But I wonder if we committed to them a certain amount of work and we communicate a little bit tighter together, like, X amount of millions of billings in the next 12 months. I guess there's no guarantees in life, but I think we could give a pretty best efforts to commit to that. If we, if they hosted maybe a bit of a road show, or even hosted something where we could get to know them a little better. Cause I mean, that's a real pain right now. And then Scott left Spellbound, so that they're down capacity wise. It's hard, really hard.
Where did Scott go, Ken?
He's at Pacific Lake. Yeah.
Would Crosslake be open to that kind of relationship? I mean, the problem, it seems like they're just drowning in work. So would they see the long-term value in a relationship with a community like this?
It's going to take some work, but we're trying. I think if we probably need to get him on one of these calls and show a little bit more depth of the community. He wasn't suspicious of us, as if we had enough volume. It's just, even at that, and the same thing's going on with them. It's, hey, we need you to do this in 2 weeks. And for them, though, what's easy is they just dust the cover off, because that company was bought 18 months ago by Carlyle, and they're selling it to BlackRock. It's like not that hard. But great guys. I mean, the Bar's awesome. We can definitely speak to them and get them in front of the right people.
I think there's a story to tell, because I mean, a little tongue in cheek, the deals we're doing are starting to look more private equity like anyway, but that's a whole nother funny comment I'm trying to make. But these companies, these are long-term relationships too. I mean, we could show a pretty compelling fact pattern of search companies that ended up being like 20-year, tons of add-on acquisitions and needs for due diligence, and the professionalism rises over time. There's a pretty good story there. I think part of it too is they don't want to walk into a situation where the searcher's not prepared and it's a time sink and they're not getting paid enough. And, maybe some of us could stick our necks on the line, like we would really try to streamline diligence and tune it to a productive workflow for them. So
yeah, I think the one thing I'll speak on behalf of the service provider, to me, the only way it's going to be successful is if a group of investors and backers approach them. It's not going to work from the individual searcher reaching out to them perspective. And look, and everybody on this call knows I started in this community from the investor side, right? And I would never have touched this if it was based on individual entrepreneurs reaching out to me, because the risk profile just doesn't make sense. And so I think that in terms of service providers, it's what Macon's doing in terms of from the investor side, creating that relationship and showing a group of you saying, you know, we'd like to use you as one of the key service providers.
Great point.
You know, the other piece that, you know, let's just put it on the table from a legal perspective. You know, at this stage, I don't know how many firms are doing this. You know, as a practical, I know it's, you know, Sidley, I know it's Goodwin. Raj is somewhere now. I'm not sure where Raj, maybe you guys know where Raj is now?
Mom is at Baker.
Baker, okay. So I don't know what kind of volume he's got. And I don't know who the other provider, you guys maybe know better. Who are the other providers in the industry that are doing this work?
Chris Hendrickson's name still comes up from time to time.
Do you know what firm he's at now?
He's at
Ovid.
Woods Oviatt, is that right?
Yeah,
That's right.
That's right.
What
Kevin
firm?
Christmas. Oh, Woods
Yeah.
Oviatt.
Woods Oviatt.
Okay. And I guess from the experience you guys have had, how are people, and we'll just, for this discussion, let's just take me off the list so nobody has to trash me on a recorded line. How are the other providers doing it in terms of the diligence work and getting it to a finish line? Are people happy with them? Because look, expanding that makes sense, because I know for a fact Goodwin is just turning work down. They're not doing work. I'm not quite there yet. Well, that's not true. With random searchers call me, I am turning work down. If it comes through an investor, I'm not necessarily. Don't necessarily do it on the timeline that's desired, but it has to come through an investor. How are Baker and Woods Oven, how are they doing in terms of bandwidth and performance?
I don't think, well, geez, for the deal where the diligence was lacking, that was, I believe that was Chris at Woods. And I think part of the issue there was the issues weren't telegraphed early enough. I think one of the things that you had taught us early on, Alex, was having like that weekly update and pushing forward on kind of key issues from a legal perspective and kind of getting all the investors on the same page from what legal issues we're going through with the PSA, et cetera. I don't think Chris or Ram have really bought into that notion yet.
So I guess for others and for everybody, do you perceive that as a searcher driven issue? Is it a lawyer driven? Because often, look, often we the lawyers get thrown under the bus for doing something, not doing something, when you're actually acting at the direction of the client. The client is the searcher at that point. And so do you think it's a stylistic thing by the lawyers, or, you know, because I think one of the challenges that I would say, you know, and I'll speak to John, I won't speak to the other people, you know, in the space, but John and I both, we grew up and still are private equity lawyers. So we do search fund acquisitions as mini private equity deals, which often pains many of you guys and pains searchers and pains sellers, but that is what we come to the table with. Some of the other practitioners don't do it, haven't come from that world of bigger scaling down. They've come from an M&A deal, just close it, get it done. And so do you think that it is a teachable thing to get them to expand, or is it they're just not interested in doing it that way? And the investor community, yeah, go ahead.
I had an interesting use case that there's probably more. So there was a law firm and they have a healthcare specialty, and you know them from the Brittany and Miles deal. Okay. And I thought they did a nice job, worked well with you on that. So because we're all bandwidth constrained, they came in on a smaller healthcare related deal. And I mean, it was a little bit more structured upfront, a little bit more intensity and edge, like this is the way we do it. And it was a little bit more of a private equity background, to your point. And that tone and that touch was a little like, I'm not sure super well received by the searcher, even though it should have been. And one of the things that was stressed early was, get the old articles of incorporation, get the stock certificates. I got to see these cap tables. It's a 22-year-old business. And it was downplayed. And look, in your world, that's probably one of many things to be super uncomfortable about, right? So the attorney's like offline to me, like, your search fund world's different. It's weird. I get it. You've told me 100 times, but this is just sloppy. Like you gotta be on this stuff. And it wasn't well received, and the right questions were asked, was on the right list. So we get 10 days away from close. Guess what the seller confesses? That there's a 5% shareholder 10 days before close. And if you read page 14 of a vendor report, the second largest vendor, there's weird little language about having an option to buy the company if there's another offer on the table.
Oh my God.
So he's just like, look, I look like an idiot. I've tried to say it, and so like, I think coming into this world's not always easy either. So to defend some of your peers, like and maybe we could all play a better part in that too. Yeah.
No, look, part of it is you can only play the cards you're dealt, right? And, a lot of it comes back to risk allocation, where identify the issues and then say to the group, okay, it is what it is. Here's how we can minimize it. And what do we want to do? And what I wonder is, how often is that conversation actually happening between the searcher and the law firm? And the searcher is saying, stand down. And it's not even getting to the investor group. And that's where it goes to what I had talked to MK about years ago, was where you guys have to insert yourself into the process so that you can't be carved out of it by definition, because you're on those calls or you're receiving the reports and the updates. Now, unfortunately, in where everybody's bandwidth constrained and things get minimized and squished in time, a lot gets lost in the translation. So there's going to be stuff where it's just risk profile is greater. It is what it is. And, the challenge becomes, is there any difference? And I think psychologically, the question that I would challenge everybody here with is, let's say there is a diligence problem. Okay. And let's say it's a $3 million problem on a $20 million deal, right? I think everybody here would say a $3 million problem is a holy crap moment on a $20 million deal. Fair enough. I pick a magnitude that's high enough. Well, you paid 7 times instead of 6 times. So at the end of the day, is it that big of a deal? Meaning, I know it sucks, but that's the way I think you need to think about it. You're making a financial decision on the diligence, whether you realize you are or not. Because what's always the struggle is you consciously decide to pay 8 times instead of 7 times. But you don't think of the $3 million diligence problem as you're consciously making that choice. Well, when you spend 150 grand less in total costs, compress it by, that's the potential downside. And if you think about it as a business decision, it's not as bad, right? I mean, it sucks at the time, but you overpaid. And then it gets to, if the process is, whether it's on the Q of E or the legal, it just can't get done. Maybe reframing the way you look at it and analyze it, that will make you feel, make the service provider better, but it might make you feel as investors better about it.
Hey, Alex, can I go back to one thing you said before that
Yeah,
I guess
hold
this-
on one second. I'm freezing
Um,
up, so I'm switching.
Okay.
Wow, it was like a perfectly timed freeze.
Sorry. Yeah, I froze. I just switched networks to get to a better one. Sorry, I heard, Alex, can I ask you a question?
Oh yeah, this is Matt Burr. Thanks guys for putting this on. This is great, and your comments definitely echo a lot that that I'm seeing, and I'm sure that everyone else is seeing. I guess what you're sort of mentioning about or I guess what Kent mentioned with Brittany and Miles's deal. I feel like it's very concerning, and I do feel like there is, we've all seen it where searchers really lose a little bit of objectivity and are just trying to get the deal done, regardless of some of these issues. And so I guess my question is, is there, first of all, it was my understanding that the law firms don't directly represent the searcher, they represent the LLC, but maybe I'm wrong there. And my question is, doesn't it make sense to have some of the lead investors, directly communicating with the lawyers in some of these issues and make that kind of a key diligence process so that we're not sort of caught off guard with some of these issues? Just a question, I suppose.
Yeah, so a couple things. As a technical matter, the LLC is the client. The board is who we respond to. The board is the searcher. The investors are actually, until, I don't mean that in an insulting way, but from a legal perspective, until you close the deal and you're then the board, you actually don't have legal status beyond as an investor. But as many of you on this call know, and we've been addressing this issue for, frankly, 10 years, as long as I've been in the space, what I have always recommended is that the lead investors, as a responsibility to themselves and the group, need to take an active role. And I've had heated debates with some investors who are looking for me in certain deals to affirmatively reach out to them and tell them about issues. And I have said to them in no uncertain terms, that is not my job. That's not my ethical duty. I cannot do that. Now, if an investor says to the searcher, you know what, we want updates, we want to see copies of the diligence reports, and I'm directed to do so, I engage regularly with those investors. But the notion that the lawyer can affirmatively reach out to you is actually contrary to what I'm allowed to do. And there are investors who have quote, and some of you have been on these deals where they've said, well, in Europe, it's a certain way. Fantastic. That's not how it is in the US. But many of the people on this call in the deals where they're the lead investors are in active dialogue with me in the weeks leading up to the deal on those exact issues, where they call and say, okay, can we schedule a half hour where you walk us through, and we invite 3 or 4, whoever wants to come on comes, and we talk about the good, the bad, and the ugly. Is it better, worse than normal? What could we do? And there have been situations where searcher has said, I'm okay with this. The investors have heard it and say, time out, go get me some protection. And again, it creates conflict, but it's very easy for the service provider, in my shoes as the lawyer, to say, look, I understand that you agreed to this with the searcher, but let me just be blunt about this. There are equity providers and they are not putting in the capital. So this is not offending anybody, being upset about this is too late in the process. If you want to close the deal, this is what's required. And I will tell you that 100 out of 100 times, the seller caves. And this goes to, Matt, your point, I think you raised about objectivity and subjectivity in a deal. The searchers, for better for worse, and it's, by the way, no different in the private equity world, the sponsors of the deals fall in love with their deal. That's why there's an investment committee made up of 3 other people that they have to convince. And I have situations where people come in and say, yeah, my partners are making me do this. I don't want to do it, but nevertheless, I've got to do it. So this happens in every circumstance. And I think it's this group's responsibility to themselves to actually be that involved and make those calls and fixable items, because the sellers don't walk away. Like, I understand they might at the beginning, but when they're 3 days away, and the conversations I often have with the searchers is, to me, it's about the timing of when you bring stuff up. If the sellers are not tasting the money, there's no compulsion. So often the conversations change when the searcher has the money wired in the bank. And you say, okay, here are the 3 things I need to close. Searchers cape or sellers cape all the time. But if at the same time you're talking to the seller about your difficulty in raising the debt financing or the covenant packages, or I have gaps, about why are they going to concede on any point? They're just times. But going specifically, Matt, I highly recommend to every lead investor to get actively involved.
That's really helpful.
Right.
Thank you.
Sometimes we're as bad as the searchers. Like we get as emotionally tied to these deals, and I there was a point Cecilia made that it triggered a thought. And sometimes why it's hard to bring in service providers, like, even though we're bandwidth constrained, I mean, these I view them as partners, and you know, I would say to any young entrepreneur, like, my CFO, my tax advisement, and my legal counsel are about as intimately close as I can be to anybody in the business world. So Alex, you know, it's scary. Like, you have to build up trust, because there's so much nuance. Every deal probably dies twice. And on every deal, you're probably going to have to decide what to sign over, even when your lawyer says don't do it. And Alex, what I love about you is you'll tell me what's wrong. I'll disregard half of it. I'll probe and I'll push, and I'll decide what I'm going to sign over, even though the great Alex Timmel told me no. But then I'll come back and say, have I hit crazy yet? And you'll say, you're crazy on that one. You could probably get by on those 2. And like, that's what I love about you. But the spirit of partnership, that's hard to build. It's hard to build that kind of trust on. Right. So I don't know if there's a way that all factors into the things we're talking about, because there's going to be some tough calls on every deal. And we get as emotionally tied as the searchers do sometimes.
Yeah, Kent, what I would say, one, thank you for the kind words, but I think most importantly, each of you should be in the position to be able to make that call. Like, that to me is the critical thing in all of these deals. And I don't care whether it's $1 billion deal or a $50 million deal or a $5 million deal. There are warts on everything. The clean company nonsense is ridiculous. There's a wart there. What I want my clients to do, whether it's on the sell side, the buy side, is whatever you're doing, make it consciously. Don't wake up to the unknown. And yeah, Kent, you make some decisions that I think are terrific. You make some that are lunacy, but you're making them. You know, that's the key. It's not like
I didn't ask for that. I mean,
yeah. Let's rewind. Take that. They're questionable in choice. No, but the reality is they're consciously made.
well, like you always tell me, hey, I got my legal hat on. You got to put your business hat on this one. You can frame it for me wonderfully, but the searcher and we got to make a business decision. And as long as we know the risk of it and the other investors know, then we make that decision together.
Yeah. And that's the other piece that I would say for all of you in talking and using counsel and lawyer. And I think maybe the same thing for the QV, although I don't know if that's more black and white, but there are certainly conversations where many of you have said to me, okay, what's the issue? And I lay it out and I give you the parade of horribles. And then you say, okay, don't be a lawyer for the next question. What would you do from a business perspective? And as Kent and MK intimately know, my lawyer answer is often very different than my business answer.
Yeah.
And it's because there's a certain role that I play as a lawyer, and then I'm happy to give you guidance on what I would do if I were in that situation. I will say I don't know whether all legal lawyers will do that.
No.
I hope that they do, but I think it's for all of you in interacting with counsel, I think that's a fair request, because there is the distinction between the parade of horribles at a legal level that can happen versus, okay, now I got to make a decision. Because if you make every decision based on the parade of horribles that I present for you, you will not do a deal ever.
Yep.
You know, but that's why you get paid the big buck. At the end of the day, that's your business decision, and just make it knowingly, type thing.
Can I throw a- Sorry, go ahead, MK. Go ahead.
Alex, I was going to ask, insofar, when you're working with searchers as a client, are there best practices to help him or her come to that level of relationship with counsel where it's, really helping to understand the risk, because they do get so wedded to getting a deal closed. And I'm just trying to think of how you can coach them early on to be more dispassionate early on, and kind of really using counsel as a sounding board for, am I going down crazy path?
I'd say, look, I can at least give you the standard that I use is very upfront. There's the conversation and the acknowledgement of you will fall in love with your deal. Okay. Your investors will eventually fall in love with your deal, but it's going to take them longer. And look at everything from the lens of your equity provider, not your debt provider, because your debt provider in legal terms is always going to have what I call the MAE factor. Like they know they're up there on the cap structure, their risk tolerance is going to be greater. But if you gave this full information to your investor group, how would they respond? And look at it from that lens. And would they finance it? Because what I tell all of them is, you're going to do a deal here. We don't know how it's going to go, but you chose to be part of this community as a searcher for a 20-year period. And there are many searchers who have had their first deal that has been a sideways deal, and they've had a second or third life that have been really positive and really good. But if it blows up because you didn't do your job properly, there is no next 15 years. Now, what I will say, MK, is I do think that I get one specific benefit that some of the other service providers don't. Most of the people that choose to retain me, for better or for worse, have generally bought into the partnership between the investors and you guys, because that is what I sell in terms of the industry. So I do think that some of the other providers are actually hamstrung a little bit in that the people that they're working with may have more of an adversarial view of the investor group and the searcher. And it's not a how big can the pie be, it's more of a zero sum thing. So I think going in, there's I'm starting at the 30-yard line because they hired me for a reason versus others who are somewhere else on the spectrum. And I think that could be playing into it quite a bit. Go ahead, Kent.
Well, I was gonna, Larry you're triggering all kinds of like great thoughts. I know, Larry, you had some strong opinions on our agenda. I feel like we have been talking over you a little bit.
They're all fantastic points. I'll just maybe throw this in. I don't know if there's anybody that disagrees that a lot of the challenges that we're talking about, correlation between the stage that the searcher's in the search life cycle. If you're talking about objectivity and communication skills and just driving to get a deal done, that from our point of view, we've seen the beer goggles put on. On
the 24th month, month beer goggles,
or thereabouts. And that's where what we would say are best practice processes. Things as fundamental as putting together a timeline to close, and demonstrating the path to closing and communication. That's where we start to see some of the deal aspects fray. The other challenge that we see sometimes, I think again, it's been touched upon earlier, so I apologize if some of this is repetitive. It's searchers that don't entirely understand what's being fed back to them from the service providers. They don't take the time to dive in and ask questions about what's in the it frustrates us in particular when we see virtually 100% of the EBITDA being the product of ad backs, and the searcher's not diving deep into that to understand how legitimate those ad backs are. I realize these are just some random thoughts, but it's all centered around the topic of the due diligence process, all components of it.
Larry, I to your point, like I saw something 4 or 5 months ago that was a little different. That service provider is hard to get a hold of. Diligence is complicated. I mean, it's always been complicated. And we were joking before, this community, I would say consistency wise, we haven't been great since the beginning, that as long as I've been around. But so you see searchers get stretched. There's a lot of pressure. You're working with your investors, and when a searcher starts outsourcing their model, like Kurt, I'll give you guys credit. When you guys model, you guys do a great job, but it's additive, it's complementary. You're not replacing them doing it. I love it. So thank you. But in this particular case, and it doesn't really matter who, they had somebody else model for them. And I said, I'm curious, let me look at the model. And it was, it was an intern, and there were a ton of mistakes. And it's like, some doesn't feel right about this. So I think there's signs like that. I'm seeing more signs like that. I don't know if it's me getting older and grumpier, but or if it's a sign of how busy we all are, but those are red flags to me. I don't know, Larry, how you'd feel about that, but
they are. We had a conversation with a searcher yesterday, and it was sort of amusing in one sense. He called us out. He said, "You guys told me how difficult the search process was when I was considering search, and we've done a lot of things to help prepare searchers for day one. We talked to them about tech stack, process. We even put materials out there that they can access. But he said, you really didn't tell me how hard the due diligence process was." And maybe this is a call to all of us, that the searchers that we partner with, maybe we can do a better job during the course of the search, preparing them. Maybe that's something that, as we talk about it today, it's going to change. It's going to change my dialogue with the searchers that we speak to, especially in the early stages of search.
I think diligence, Rich, it's like rebounding in the NBA. You got to really, really want it. I mean, it's pretty hard.
Dirty work.
It's dirty work.
I have one sort of overriding thought I'd like to just throw out. I'm probably the most sappy of all the investors out here in terms of emotionally connecting with searchers and wanting to get a deal done. But I think it's time we all start to recognize we're complaining about multiples, we're complaining about bad due diligence, higher risk, lower quality deals. I think we've got to get used to the idea that we're going to pass on more deals and be more upfront about that and kill deals earlier. It's hard to do because we've all had great outcomes from deals that kind of limped along and you weren't sure about, and then there's something flowered. But we may just have to be a little more cutthroat. And to me, part of the excellence of the search fund model is watching the maturation of a searcher through the search itself, and managing a due diligence process properly is, if they botch it, that's a signal they might not be able to handle a complicated business situation down the road. And so maybe it's just as well.
I'd love to, at the risk of changing the subject slightly, I'd love to throw a question out to the audience that's been on my mind as this topic was proposed for this roundtable. and it's an area of diligence that we have not covered so far today around legal and accounting and tech and other things. And it's around sort of organization diligence, seller diligence, and the team that the searcher's about to inherit. And it's particularly germane because I now sit on a few boards where we've figured out post-close that there are culture issues at the company, or the seller wasn't as good a guy as we thought he was, or what have you. And I'm sure everybody that's sat on boards has encountered the same things. And I'm curious what ideas folks have about helping us as an investor group figure that out pre-close, or at least have a better understanding of it pre-close. I've got a couple of ideas, but maybe I'll just throw the question out there and see what folks have to offer.
Kurt, question for you. In those situations where things haven't gone as well as hoped, do you think the searcher had any knowledge of that beforehand, and they either hid it from you or hid it from themselves? Because one of the things that we encounter regularly on the legal side is, and it's a regular conversation every deal of, okay, who's going to need employment agreements? Are we signing people up to equity plans? Who are the key players in the company, and how are we comfortable with what their arrangements are? And probably more than any other topic, we'll deal with that. I don't want to, the seller's not comfortable with me talking to anybody but the inner two. And to me, that, just from doing this for 25 years and 500, that's a red flag right off the bat. And, the question is, as you look at your problems, are they the type that, yeah, it's just a deal risk and it's manageable, or is it something that you might have made a no-go decision on if you had known these things up front? Because if it's just, you just know what the problem is, and then you'd have to deal with it, maybe you could deal with it more easily, but are they no-go or go type decisions and issues?
I guess it varies, Alex, but I think there are some cases where the searcher might have had a clue about it, but didn't, there was selective disclosure and they chose not to disclose that to investors, maybe because they didn't think it was important, or maybe because they underestimated the degree of the problem, but they knew about it and didn't disclose. I think there are other instances where maybe, they disclosed and nobody probed further. So I think this person might be a bit of a problem, but we can figure it out when we close, and then, or post closing, and then we get in there and it's a much bigger problem than we anticipated. I would say probably at least half of sellers are just going to hold things fairly tight. Maybe not half, I don't know, but some sizable portion are going to hold things really tight and say, you can talk to me and you can talk to my CFO and that's it. And I agree, that's a red flag. But I'd say it runs the gamut, and it comes, I think one of the solutions comes back to one of the earlier things that was discussed, which is, I think investors, or a lead investor or a couple of lead investors, probably need to almost tell the searcher, like, it is mandatory that I meet the seller, or that we get exposure to not just the seller, but their direct reports, or a couple of their direct reports. Because in a couple of those instances, we have noticed things that maybe the searcher didn't appreciate, or that now we appreciate better as investors what we're getting ourselves into. And at least we can go in, like you said, make a conscious decision. We're going in and we know that this could be a challenge. We're accepting that because we like these other facets of the deal. I think the sort of not knowing about it is the big issue. And we've been surprised a couple of times by just simply not knowing about it.
If I could just offer two quick comments. I think these are really great points. And one thing that we do or suggest to searchers frequently is, before you spend a dime on diligence, QV, legal, run a background check on the seller, use Ethos. It'll cost a couple $100. It could literally save you hundreds of thousands of dollars. Like, we've seen that derail some deals at the end where it came out that, the sellers had criminal records. I think too, a big part of it is, is the seller litigious, right? Or people close to them. Have they had multiple lawsuits, particularly that they didn't disclose to the searcher ahead of time? And And then also too, I guess the one thing we look for, and look, I don't want to make this sound like we have this figured out, because we've gotten burned on this like everyone else. But I think that to the extent you're able to get turnover and to see how the turnover of the company, how that compares to other companies in the industry, that can be helpful. I guess my question with the turnover is that is going to be seller disclosed. So maybe there's a way to encourage searchers, like, really go through all the company payroll history and do that part yourself. Don't just rely on the seller. Figure out, are people just leaving left and right? Are people high up in the company leaving left and right?
I mean, you could also figure that out. The searcher could figure that out with a good LinkedIn scraping. They can
Great point.
figure that out maybe on Glassdoor. So there are other ways for the searcher to figure it out that don't rely on the seller's, full disclosure of data, perhaps.
One thing I might throw out there, and I know we're getting low on time, for this group to consider from an investor perspective, one of the things that we have formalized in the industry, and it's interesting because the PRN process, the LLC agreement, and the negotiation of those terms, it's interesting. If we had a call like this 10 years or 7 years ago, everybody would be complaining about how fragmented that approach is and how difficult it is. And it has become routinized, right? For better, for worse, there's a form. Goodwin has modified mine a little, but at the end of the day, it is what it is. One thing you guys ought to consider as an investor group is, do you have an investor constitution that lays out your expectations of, so for instance, I'll give you a specific example. Like every searcher that works with me, I tell them, don't start with me until 5 weeks before your target close, because all you're going to do is cost yourself an extra $100,000 and I can get the deal done in 5 weeks. But if you literally as a group, or some of you as lead investors said, okay, at the 60-day mark, we're going to have a call and you need to tell me the status of these 5 things. At the 30-day mark, we're going to do this. And it becomes routinized, because what's amazing about this industry is how quickly stuff becomes the standard. So it might be that 2 weeks before the target close, there's a diligence call with the searcher, the law firm, and you go through the key items. Maybe at the 70-day mark, it's with the Q of E provider, but something where I know each of you had met your point of the background check. Before you sign a term sheet or within 7 days of signing a term sheet, you run background check, meaning just standards for the industry that, look, we're never going to stop every disaster, and we're all going to be able to sit around 10 years from now and talk about the problems that came up. Because if a seller wants to defraud you, you're going to get defrauded. It is what it is. But, Kurt, maybe to your point, at the 3-week mark, there's a conversation, a continuity discussion. What will you need to run this company for the next 6 months? Let's identify. But if you don't spell it out concretely, you're only going to do it occasionally, and different leads are going to do it differently. But I can guarantee you that if you guys put that together, or some group of people put that together, it could easily become like the form documents. This is the standard, and you got to do it. And Relay's no different than M2O or Search Fund Partners or the Burrs or Kent or whoever it is. If you want this investment group to back you, you've got to do these 9 things. Just as a possibility of kind of having an investing constitution or something like that.
Great idea, Alex.
Yeah, that's smart, Alex.
I'm almost thinking like checklist manifesto, like we need a checklist that sort of investors have signed off on, and all right, I'm not sure if this needs to be week 6 or week 7, but you need to make sure this is done before we close.
Yeah, and back to your original question, Kurt, one thing that we've found to be instrumental in finding out what that interrelationship or personality relationship within the team is, if investors can actually have a meal with the seller and some of the key players, so much comes out of those conversations that and I think the way investors see that dynamic versus the searcher is very different, because I think we're contextualizing it in all the other sellers and leadership teams that we've seen in the past, which is very helpful.
Yep.
But the Constitution is a great idea. And I
Yeah,
think,
and remember, on your point, MK, remember, they're 27, not to criticize 27-year-olds. They're sitting at the table with the sellers, and there's only one person on this call who might fit into that range of age, so I'm not gonna call them out, but so I'd be happy to be 27. But their view of that conversation with the sellers is so different than when you sit with them, MK. And it also works the other way of giving them credibility. Like, they think of it as, this is my parent looking at me, but those sellers who have met the equity backers actually feel much more comfortable about process. So like the meet the parents meeting, that actually might be something you put on there. It says in every deal, you know, and again, whatever rules or constitution we come up with can be altered for a particular deal if the dynamics aren't right. I don't by any means mean that this becomes like an unyielding thing. But again, if you're not going to meet the parents, consciously decide you're not going to meet the parents.
Yeah, I think the Constitution is a great idea, and I do think, just so everyone knows on this call, you know, we'll probably start working on something on that and getting everybody else involved, because I think that would just be a huge benefit to these processes going forward. It's just basic.
Anything else? We are up against the clock, I think. So I don't know if there are any final questions from the group.
No, but Alex, great thought. I'm going to be following up with you shortly. Sorry about that.
Yeah, it's the other service provider on the call who's going to do that. No. So we have obviously come up with it. This was a different style of agenda, not necessarily intentionally, but I think it actually ended up being in many ways as more of a round table and really productive. And as I said to the group earlier, I really enjoy the in-person smaller meetings because it gets to be more of a brainstorming dialogue, and we actually had that opportunity here. So thank you, panelists. Thank you. Sorry you didn't get to answer any of the questions I was going to call on you for, but Rich, Kent, and Larry, thank you for volunteering to do this up front, and those who dialed in, really appreciate the thoughts.
Great seeing
Thanks,
everybody.
Alex.
Thanks,
Yeah.
Alex.
Thanks, everyone.
Very great seeing you.
Bye.
Great to
Take
see you all.
care.
Hopefully in
Bye-bye.
person sometime soon. Jesus.
Bye.
Bye.